Welcome back to Crypto Macro Insights. I'm Maya, and it's August 22nd, 2025. Tom, we're seeing an interesting continuation of yesterday's theme. Bitcoin is holding at $112,500, still in that consolidation phase we discussed. But there are some new developments brewing. What's your take on today's market action?
Thanks, Maya. You're absolutely right. We're seeing this consolidation play out exactly as we discussed yesterday. Bitcoin is stuck in that 108K to 118K range I mentioned. But what's really catching my attention today is the community sentiment shift and some concerning discussions around MicroStrategy's leverage. There's also this massive development in the reverse repo market that's flying under the radar. Today I want to dig into the range trading strategy and why September could be make or break time.
Let's start with that sentiment shift you mentioned. Yesterday we talked about nervous optimism, but what are you seeing today?
The mood is definitely souring, Maya. I'm seeing posts like, will we ever get another bull market? It's been 4.5 years already, and people are genuinely questioning if this cycle is over. There's this growing cynicism. One post that stuck with me was someone saying that only money really moves people, not achievements or hard work. That's the kind of late-cycle fatigue that worries me. But here's what's interesting. The MicroStrategy discussions have taken a darker turn.
MicroStrategy again, they just can't stay out of the headlines. What's the concern now?
People are doing the math on their debt structure. They have $8.2 billion in debt against $73 billion in Bitcoin, but the community is calling it a house of cards and comparing it to the dot-com bubble. One post really captured it. Why doesn't Saylor just pay off the debt and let the rest ride? There's this growing sentiment that it's pure gambling disguised as strategy. The comparison to the 2000s IT bubble is becoming more frequent, and that's never a good sign for market psychology.
That's definitely a shift from the institutional adoption narrative we've been hearing. But let's look at the actual macro data. Are the fundamentals still supporting Bitcoin despite this sentiment shift?
Here's where it gets really interesting, Maya. The fundamentals are actually even more supportive than yesterday. The reverse repo facility has absolutely collapsed, down 67% in 6 months to just $25 billion. That's unprecedented liquidity flowing back into the system. Meanwhile, the dollar continues to weaken, sitting at 120.76, and real yields are falling to 1.94%. These are all textbook Bitcoin positive conditions.
That reverse repo collapse sounds massive. Can you put that in perspective for our listeners?
Absolutely. 6 months ago, there was over $76 billion parked in reverse repos, essentially money that was taken out of circulation. Now it's down to $25 billion. That's roughly $50 billion of fresh liquidity that's been unleashed into the financial system. For context, Bitcoin's entire market cap is around $2.2 trillion. So this is significant money. Historically, when this much liquidity hits the system, risk assets like Bitcoin tend to benefit enormously.
So we have this interesting disconnect, supportive macro conditions but deteriorating sentiment. Any warning signs in the data?
There is one concerning development. High-yield credit spreads have widened to 2.94%, up 5.8% over 6 months. That suggests some risk aversion is creeping into credit markets. It's not alarming yet, but it's worth monitoring. The VIX is still low at 15.69, so equity markets aren't panicking, but credit markets often lead equity markets in sensing trouble.
You mentioned September could be make or break time. What's coming up that has you concerned?
The economic calendar is remarkably quiet until early September, which is actually good for this consolidation phase. But then we get hit with the ADP employment report on September 4th, followed by the monthly jobs data on September 5th. Given the Fed's laser focus on employment data and the current market sensitivity, strong job numbers could reignite hawkish Fed expectations. That's potentially the biggest risk event on the horizon.
So we have supportive liquidity conditions, a quiet calendar for the next 2 weeks, but employment data as a potential landmine. How are you positioning for this setup?
I'm sticking with that range trading approach from yesterday, but with some refinements. The range is holding beautifully, 108K to 118K, and I'm maintaining that 45% probability for continued consolidation. But I've adjusted my positioning slightly. I'm using tighter stops at 3% given the current volatility patterns, and I'm keeping powder dry for the September employment data. If we get weak jobs numbers, that could be the catalyst for the next leg up.
You're betting on bad news being good news for Bitcoin? That's a classic late-cycle dynamic.
Exactly right, Maya. We're in that phase where Bitcoin benefits from Fed dovishness more than economic strength. My bull scenario has actually increased to 40% probability if employment disappoints. That could trigger the break above 115K I'm watching for. The key levels remain the same. Above 115K sustainably gets us to 125K to 130K territory. But I'm also keeping that 20% bear scenario alive. If jobs come in hot and we break below 106K, we could see 95K to 100K pretty quickly.
Tom, if you had to give our listeners one key metric to watch over the next 2 weeks, what would it be?
Same as yesterday, watch that dollar index like a hawk. It's sitting at 120.76, and if it continues weakening toward 120 or below, that's your green light for Bitcoin strength. But if it reverses above 125, especially ahead of those September employment numbers, that's when you want to get defensive fast. The dollar-Bitcoin inverse relationship is still the most reliable trade in this market.
Perfect summary, Tom. So to wrap up for our listeners, Bitcoin is range-bound between 108K and 118K with massive liquidity support from the reverse repo decline, but watch out for September employment data as the next major catalyst. The MicroStrategy leverage narrative is worth monitoring, and that dollar index remains your North Star. Thanks for another great analysis, and remember this is not financial advice, always do your own research. We'll be back Monday with fresh insights. Until then, trade smart and stay liquid.